Hello everyone, this is the part 2 of chapter 5, returns, discounts and sales tax. In the part 1 we had already discussed returns and discounts. If you haven't watched it yet, check the description box below. I've linked all the playlists and the part 1 of this video. After watching that, you have to watch this. Here we will be doing the last concept in the chapter, which is the sales tax. Okay, so I had given a homework. Yeah, so the test understanding 3 was a homework. I hope you've done that. In case you've not done that, you can do it with me right now and make sure that you have a notebook ready with you, and everything I'm writing and everything I'm explaining, you need to write it down, because if you don't write it down, then there's no point of watching this video because you cannot learn accounts orally. Okay, so let's see what the test understanding 3 states. George owes a supplier, Herbie, $2,000 and is owed $3,400 by a customer, Iris. George offers a cash discount to his customer of 2.5% if they pay within 14 days, and Herbie has offered George a cash discount of 3% for a payment within 10 days. Let's first write it down. So we are doing test your understanding 3. Test your understanding question number 3. Okay, so we are George, right? We are George. Keep that in mind. And now let's go back to the question. George owes to a supplier. Herbie is the supplier, right? Herbie is the supplier. And George owes to the supplier. How much does George owe? George owes $2,000, right? So $2,000 he owes to the supplier. What's the next thing which we have seen? George is owed 3,400 by a customer, Iris. Okay, so now we have Iris. Iris is a customer. And how much does Iris owe? $3,400, right? $3,400 and owes to George. Okay. Next part of the question. George offers a cash discount to his customer of 2.5% if they pay within 14 days, and Herbie has offered George a cash of 30% for payment within 10 days. Okay, we'll come to that. George took advantage of the early settlement discount offered and paid Herbie within 10 days. Iris was expected to take advantage of the early settlement discount offered to her, and therefore the sales invoice raised by George was prepared on that basis. However, Iris didn't pay. Okay, let's see them one by one. The first thing you need to do after seeing a lesson or a question is underlining the key points, and after underlining the key points, you need to write them down in short pointers the way I have written. Now let's first discuss the Herbie part. Okay, so we know what has happened. Who is Herbie? Herbie is the supplier. Herbie has offered George a cash discount for 10 days, 3%. So how much? 3% on 2,000, right? This much is clear. So George took advantage and paid within the 10 days. So now let's see. So we have, it's clear in the question that the payment was made within 10 days, which means the discount has been given. Now let's see what. So what was the initial entry when we sold the goods to George? So what happened? We are George. So we are going to write the journal entries in our perspective. So what will the journal entry be? Debit the trade payables, right? Debit the trade payables, and we are going to pay in cash, right? Cash or bank. Credit the bank, but we are also getting a discount, so we are going to credit the discount receipt. In my books, it's going to be discount received, but in the books of the supplier, it's going to be revenue. You know that, right? Now let's see how much were the trade payables. We know that in the question, trade payables was 2,000, and how much was the cash discount? It was 60, right? Why is it 60? Go and try multiplying, go and try finding out the discount. You will be doing it by yourself. So if you minus it, it's going to be 1940. So the bank is 1940. So this is our journal entry for the first part, right? So the net cost of goods which has been purchased is nothing but 1940. So this is our net cost, right? This was what we had to pay. So that's with the first part. Now let's see the B part. What accounting entries are required by George to record the receipt from Iris? Now let's read about Iris. Iris did not pay within 14 days and paid full amount after 30 days. So we actually had assumed that Iris will be taking the benefit of the discount, but Iris did not take the benefit of the discount. So now what will we do? Let's see that. Now what will we do? Iris was expected to settle the amount, but she didn't do it, right? So she was initially getting a 2.5% of discount, which she failed to pay. So now what will we do? So we are going, this is our book. Read the question properly. We are making the books of George, not of Iris. So trade receivables gets debited, right? And we are going to also credit our revenue, right? By how much? 3315. Well, how did I get 3315? Tell me, how did I get 3315? Because the amount, the invoice which we had prepared was after deducting the discount, right? Because we had expected Iris to take the discount, but she didn't take. So that's why. Hope that is also clear because we've discussed it. Now what happens? Iris is going to pay the entire amount, right? So our bank account gets increased by the entire amount, which is 3,400, and our trade receivables decreases, right? This is the initial value, and we're also going to credit the revenue. Why are we crediting the revenue? Because she paid the entire amount now, but her invoice was made on this. Initially her invoice was made on this amount, but now that the due date has passed, she has to pay us the entire amount. So she even pays the discount which we were potentially supposed to provide. She even paid that. So that's it. Clear? I don't think there's any doubt in this question, because in the previous video I've discussed the journal entries very clearly. So I hope there's no issue in that. Okay, moving on. Okay, now we come to a fresh topic, and that is the taxes. So this is a very easy topic. So first we'll be doing what a sales tax is. So there are a few journal entries which we need to learn in this chapter, in this topic. So that's it. It's very easy. We'll complete it within a while. So what is a tax? Tax is something which we are supposed to initially pay to the government, right? You know that we pay various sorts of taxes like income tax, property tax, entertainment tax, and GST and whatnot. Okay, so sales tax is levied on the final consumer of the product. So whoever is the final consumer of any product, they have to be paying the sales tax. Unless they are the final consumer of the product or service, then an entity that is registered to account for sales tax is essentially acting on collection agent for the relevant tax authority. So let me explain it to you. So various kind of taxes are charged. So what happens in, sometimes if we are the final consumer, let us assume that I am a final consumer. I have to pay the tax to the government, right? This is the government. Let's call this a government. Okay? This is a government. I don't know why I made a house, but this is a government. And this is me. Who am I? A consumer or a customer. Okay? Okay. So I have to pay tax to the government. Do I go directly and pay to the government? Do I ever go to the government office and pay the tax? No, that doesn't happen. That never happens. So who do I pay the tax to? Do I pay the tax directly to the government when I am buying a, let's say, biscuit? I'm buying a chocolate. So there is, let's say the chocolate is of 110 rupees. The chocolate is of 100 rupees and 10 rupees is the tax. Do I go directly to the government and pay the tax? No. Then who do I pay the tax to? I pay it to the shop person. The shop person collects MRP from me. The shop person collects 110 from me. So the shop person will keep 100 with himself and will give this 10 rupees to the government. So I pay the tax to the wholesaler, or I pay the tax to the seller, to the production person, right? I never go to the government directly and pay. So I pay the tax to the production person, or let's say wholesaler, whoever sold the goods to me. Whoever sells the goods to me, I pay the tax to them. Now what happened? This person will give the tax to the government. So this person will give the tax to the government. So I am paying the tax, and this person will keep a little bit for himself. He will keep his revenue with himself and pay the rest of the entire tax to the government. So he collects the tax from us consumer on behalf of the government. Clear? Any doubt? Now let's read. So now you understood what it means by collection agent for relevant tax authority. Sales tax is charged and paid on purchases, input tax by suppliers, and charged and collected on sales, output tax. So this is something you need to keep in mind. Okay, I hope you're noting this down. So on purchases, we always have an input sales tax, and on sales, we always have an output tax. So keep this in your mind, okay? Whenever you purchase, you have to pay the input taxes, and on sales, we always have the output taxes. Now, let's see. An entity registered for sales tax will effectively pay over the sales tax it has added to its sales and recover the sales tax it has paid on its purchases. To this end, the entity incurs no sales tax expenses and earns no sales tax income. Therefore, sales tax is excluded from the reported sales and purchase of the entity. Periodically, the entity will calculate the total amount of sales tax added to sales and the total tax added to purchases. If output tax exceeds the input tax, the entity pays the excess to the tax authority. If input tax exceeds the output tax, the entity is refunded by excess. Okay, now let's talk about it. I will explain. Don't worry, everything is very easy. Okay, so first thing you need to keep in mind is this. In ACCA, we have something called as the net sale value and the gross sale value. Okay, price. So firstly, let's remember this. So net sales price, let's talk about that first. Don't get confused with the traditional meaning of net and gross. It is a bit different in ACCA. So I'm making it clear for you guys, so don't worry about that. So what is net sales price? Net sales price is always exclusive of tax. So how can you remember this? Net sale. So for us, net sale means the actual price of the commodity without including the taxes. Removing all the taxes and everything, the actual value of the product is known as the net sales price. Easy? Very clear? Now tell me what a gross sales price is. What is a gross sales price? So gross sales price is when it includes the tax. Okay? So when you add the tax amount to the product actual amount, then you will be getting the gross value. Easy. Nothing is difficult in this. So now tell me one thing. the biscuit example or the chocolate example we've taken, 100 and 110 rupees, right? So what do you think? What is the net sales price? What is the actual price of the chocolate? It is 100, right? It has no tax included. Now when you talk about gross sales price, what is the gross sales price of the chocolate after including all the taxes, which was 110? Easy, clear. Okay, now let's move on. So now we have few formulas to keep in mind. It's very easy, don't worry, and I'm repeating it again. I hope you are making notes of these because you have to. So now you understood what net sales price is and you know what gross sale value is. So in the biscuit example which we took, or the chocolate example, so we have 100 plus the 10 rupees tax, which is equal to 110. So the 100 is nothing but net sales value, net sale price, and the 110 is nothing but the gross sales price. Okay, clear till now? Now let's move on. So now you need to keep in mind two of the formulas. So in the question, if you have a tax exclusive, okay, so now you know what tax exclusive is. What is tax exclusive? When tax is not there, then it means it is the net sale price, right? So if in the question you have a net sale price which is given, then how do you find the net sale? How will you find it? How will you find the tax? Wait, I'll just write it in another color. Okay, this is the first condition wherein tax exclusive value or a net sale price is given. So in such a situation, how will you calculate tax when the value does not include the tax? Net means the tax value is not included. So what is the formula here? In such a situation, it is nothing but value which is given in the question, value multiplied by rate, upon 100. Easy, no doubt. Value multiplied by rate upon 100. This happens when the net sale price is given. Now let's see the second part. Second part is when tax inclusive is given. You know what tax inclusive is. Tax inclusive is nothing but gross value, right? You know that this means the gross value. So if gross value is given, then how will you calculate the tax? So the value which we are having, the gross value multiplied by rate upon 100 upon 100 plus rate. Okay, easy. Any doubt? Pause for a moment and just read what you have written and try to learn it. These are the basic formulas and the questions which we will be having. You have to directly apply these formulas. If you understand the logic behind this, then I don't think there's any problem which you'll be facing. Okay, now let's come back to this. We saw what it is, right? Whenever you purchase a good, you pay input tax on it. Whenever you sell a good, you pay an output tax. So what is the amount which you have to pay to the government? Let's talk about that now. The net amount which is payable to the government, net amount payable to the government, is nothing but output tax minus input tax. Okay, so this is the formula of the amount which you have to pay to the government. So you know what input tax is. Input tax is whatever tax you have paid on the purchases. So when you purchase something, you already paid the tax, which means that amount of your tax is already going to the government because you paid it to an agent, right? So whenever someone when you sell for a good, then you are the agent, right? So people, when you make a sale, then people are going to pay you the tax. So you become the agent in this case, right? And you have to pay that amount to the government. So that is the output tax. Input tax is something which you have given to the government. Output tax is something which you have to give to the government. So when you purchase, you already paid the tax. When you make a sale, then you are receiving the tax, which you have to further pay to the government. So the net amount which is payable to the government will be output tax minus input tax. Why? Because output tax, what is output tax again? Tell me. Output tax, quickly. You can refer to it. Output tax is something which you have to pay to the government, right? Which is sales. So output tax is something which you have to pay, and you are going to subtract the input tax. Input tax is something which you have already paid, right? So when you purchase something, you have already given the tax. So output tax minus input tax is the net amount which is payable to the government. So output tax is whatever is due minus whatever you have already paid. You have already paid. So when you subtract this, you will get the net amount which is payable to the government. Clear? Any doubt? You can comment down if you have any doubt, but I don't think there is any doubt in this. So that's it. That's it with the formulas, and that's it with the concept in this chapter. That is what is given in your book. You can go and read it if you want to. Now we are left with the journal entries. We will also come to the journal entries now. Okay, let's just quickly go back to our Kaplan and see. So you can read it by yourself. It's the same thing everywhere. Periodically, the entity will calculate the total amount of sales tax added to the sales and the total sales tax added to the purchases. If output tax on sales exceeds input tax on purchases, the entity pays the excess to the tax authority. If input tax exceeds the output tax, the entity is refunded the excess by tax authority. Okay, now just link it to what we have discussed. If my input tax is more than the output tax, which means I have paid more to the government than I should have, so I will be getting a refund of some of the tax. If my output tax is more than my input tax, which means the amount which I have input to the government, the amount which I have paid to the government is lesser than the amount I actually had to pay. So if you subtract it, you have to pay the excess amount. Easy? No doubt about it? If you are still not able to understand, go back, rewind the video and watch it again and listen to me again. You will be clear with it. Sales tax is sometimes referred to as value added tax or goods and services tax. Sales tax is charged on most goods and services, although you are not expected to have any detailed or specific knowledge of which goods and services are subject to sales tax. So when it comes to calculation of sales tax, I have discussed this net selling price, net sale price, sales tax, gross sales tax. This I have discussed, so you can just go through that again. Okay. Okay, now let's come to the illustration. Orlando sells the following goods to Bruno at a tax inclusive price of $470, to Cosmo at a tax exclusive price of $700. How much sales tax is Orlando collecting on behalf of the tax authority if the rate is 17.5? Very easy. You know our formula of inclusive and exclusive. Just try doing that again. So what is it when it is inclusive and what is it when it is exclusive? You know the formula. So Bruno at a rate of tax inclusive. So because it is tax inclusive, which means the gross value is given. So value into rate upon 100 plus rate. So what is the value? Value into rate upon 100 plus rate. 117.5. Okay. What else have they done? 470 into this. Same thing what we have done. Same thing which matches with our formula. You know our formula now. So if you find the answer, you will be getting $70. Now let's come to the second one, tax exclusive. So what do you have to do when it's tax exclusive? value into rate upon 100, value into rate upon 100, which is nothing but this much. Okay, how much sales tax is he collecting? So how much sales tax is he collecting? You have to add this and this, the total sales tax, you add it and then you get this. Easy, no doubt, just the formula. Let's go to the test understanding 4. Lorenzo purchases goods of, okay, I'll write it clearly, I know it's not clear. So Lorenzo is purchasing this much goods for this much amount including the sales tax, and sells the goods for this much including sales tax. The sales tax rate is this much. What amount of sales tax is ultimately payable to the government? Okay, so now let me tell you something. We have already seen that the net amount payable to the government. What is the net amount payable to the government? Where did I write that? Let's go back to the net amount which is payable to the government. So it is output tax minus input tax, right? And you know, input tax is something which is given on purchases and output tax is given on the sales. So you need to find the input tax, you need to find the output tax, and you need to subtract input tax from output tax. Then you will be getting the amount which has to be paid to the government. Let's see the Lorenzo one, the Lorenzo question. I know it's not clear, let me write it down for you guys over here. So Lorenzo, which is test to understanding 4. Lorenzo purchases goods. I want you to solve it by yourself along with me. Purchases goods for 174,240 including the sales tax. So the value is inclusive. Okay, and let's see the sells part. Sells goods for 230, 400, which is inclusive, right? And the rate is given, which is 20%. So now you need to find the input tax and the output tax, and you have to subtract input from output. Then you will get the net amount which is payable to the tax authority. Now try solving it by yourself, giving you 2 minutes, then I'll be discussing the solution. Okay, so now I will help you solve this. So first let us see the purchases part. So when you purchase something, you pay the input tax. So let us first calculate the input tax. So you know what the input tax really is. What is input tax? Input tax, which is inclusive of taxes. It is inclusive of taxes. So when something is inclusive, what do? If it is inclusive, you have the gross value, which means rate upon 100 plus rate, right? Rate upon 100 plus rate, 120, and rate upon 100 plus into multiplied by the value 174240. So calculate the answer. 2 1s are 2, 2 6 are 12. So which is 174240 divided by 6, which is nothing but 29040. So it is 29040. So 29040 is nothing but the input tax. Okay. Now let's go to the output tax. So we know what the output tax also is, right? So the output tax. So what is the output tax? It is given in the question. Output tax on 230400. So it is also including the sales tax. So it is also inclusive. So you know how you calculate the inclusive now. So we have 230400 into the rate, which is 20 upon 120, which is this again. So we will be multiplying 230,400 divided by 6, which gives us nothing but 38400. So now we have the input tax and we have the output tax. So what is the net tax which is payable? Net amount which is payable is what? Output tax, which is due, minus what you've already paid, minus input. So that will be nothing but 38400 minus the input tax. And what was the input tax? 29040. So now let us do 29040. So it is 9360. Okay. So it is $9360. So the answer, let's go back to the question and see if we have it. So yes, it is A part, which is 9360. I hope you all got the answer. So this is very easy, very straightforward, right? Now let's move on. Okay, now we have done everything. The only thing which is left is how do we pass a journal entry of the same. So you have understood the concepts, you have understood the formulas, you have understood how to find out or calculate the taxes. Now you have to just do the journal entries. Okay, right. So let us first go back to this. There are two conditions. Okay, let us assume that there is a situation where the input tax, what is input tax? This is the tax which you have already paid to the government, is more than the output tax. Output tax is the actual amount which you have to pay. This means you have paid excess, right? This means that you have paid excess amount. So excess amount will be refunded. Excess amount will be refunded in such a case, will be refunded. And this is one case. Clear? Now let's see what the other case is. The other case is when the input tax which you have paid is less than the output tax, which means this is your due amount, output tax. So you have to pay more amount because the amount which you have already paid, the input tax, is not sufficient, which means that you have paid less amount. So so now amount is due. Amount is due. You have to pay the due amount. Easy. So you have to pay the due amount. Now let's go and check out the journal entries for the same. How we're gonna go about the journal entries? First, let us see this. What happens in the situation of purchase? So in the situation of purchase, you know that what do you have to pay? You have to pay the input tax, right? So first you're going to purchase. So normally how do you pass a journal entry? you debit your purchases account, right? This is the net value. Okay, you know what the net value is. And you are also going to debit the sales tax, right? After sales tax, you are going to credit the cash payables. So you have to pay the amount which include both purchase as well as sales tax. So cash or payables will be the total. Clear? Very clear. Now the same way, how do you pass the entry of sales? You know how you pass the entry of sales, like you usually do. So when a sale happens, you receive cash or you receive the receivables, and then you're going to credit the sales, and you are also going to credit the sales tax, right? Because you're also receiving that in cash. Okay, this much. Any doubt in this? This is basic stuff. Now let us see the balancing which we have learned. So you know what the balancing is, we have discussed here. So let us see when the input tax is more than the output tax. So what happens? You paid excess, so you will get a refund. So when input tax is more, then what happens? You get a refund, right? Let us write the journal entry here. Let me just zoom out for a second. Okay, so here the input tax is more than the output tax, which means we have paid excess and you will be getting the excess amount back. So we are going to debit the cash account because you will be getting cash from the government, you will be getting the return, and you are going to credit the sales tax. You will be crediting the sales tax. Okay, this is the amount, excess amount which you have received. The same way, what happens here, if the input tax is lesser than the output tax, which means you have to pay the excess, here you are going to debit the sales tax and you're going to credit the cash. Okay, you're going to debit the sales tax and you're going to credit the cash because you are going to pay the excess amount of cash. That's it. These are the journal entries. I don't think there's any doubt. Let's just move on. We are done with this chapter, but we will just look at the questions. So this is the same thing. Payment of output tax. Okay, we have discussed this. Now let's come to test understanding 5. Record all these transactions in the ledger accounts. So these are the transactions which are given in the question and you have to be recording it in the ledger accounts. So what are the ledger account? You make a purchase account, you make a sales account, right? And obviously because it is on credit, you also have to pay you also have to make a receivables account and payables account. For purchases, you have to make a payables account. For receivables, you have to pay a sales, you have to make a receivables account. Very easy. Now let's think about it. So let us make all the books first and then we can look at the question. This is your test to understanding 5. I hope you're making it by yourself as well. I am saying this again and again, but there's no point if you don't make it yourself. This side is the debit and this side is the credit, and this is our amount column. Oops, yeah, this side is the amounts column. Okay, and this is the sales. Let's also make a purchase account. Purchase account. This is the debit side and this is the credit side. We have this, right? And now we have what we call the receivables account. This is the receivables account. After the receivables account, we have a payables account. Okay, So now let us go back to the question. Since we have made, that this is the debit side and this is the credit side. Let's go back to the question and let's see the first one. So purchases all on credit, net sales tax total. So what is the net? Net is when the sales tax is not included. Clear about that. And total is the gross value wherein the sales tax is included. Okay. So record these transactions. Purchases all on credit 180,000. Okay. So we are purchasing something. What will our journal entry be? Purchases to cash or what? Purchases to payables. Since this is a credit transaction, we have purchases account gets debited and payables account gets credited. Purchases account gets debited and payables account gets credited. With how much value? Which value are we going to consider in this? 180. We are always going to do the net value. Why? Because purchases are recorded net of sales tax, as this is not a cost to the business. So the sales tax or the purchase tax is not a cost to the business. So we are always going to have the net value and not the gross value. So here we will be doing 180,000, and let's go to the payables and we have to make the purchases over here. Purchases, which is nothing but 180. Okay, so let's move on to the next one. We have what we call the sales, which is nothing but, okay, how are we going to record? Same thing again. Sales are recorded excluding the sales tax. Why? Because it is not the income. So when you make a purchase, that is not this purchase, the tax is not our expense, and here in receivables the tax is not our income because we have to pay to the government. So we are going to exclude the sales tax in all our books. In our books we always note the net value and not the gross value. Okay, so now let's go to the sales account and we will be having receivables here of 260,000, and the same way we have in the receivables sales tax. Okay, now tell me in receivables, what is it gonna be? Think about the journal entry again. Think about how you will write it. In purchases and sales we are not included, right? And in receivables, are we supposed to include or not? And tell me if we made some mistakes in the payables. This is where you are going to be tested. This is the kind of mistake which you will be making in the exam. What mistake did we make? Recall what all we've studied so far. Recall all the journal entries and recall, and now come back to this question and tell me the correct answer. In the ledger accounts, in the sales and in the purchase, we will not be recording the taxes because we will be recording the value of the purchases, actual value, and we will be recording the actual sales value. But when it comes to receivables and payables, are we going to pay the half amount or are we going to pay? Okay, let's talk about payables. Do we have to pay half amount or do we have to pay the amount including the tax? Obviously, you have to pay the money including the tax. And when you're getting receivables, when you make a sale, they will be paying you the tax amount. So in receivables account and payables account, obviously you have to write the entire thing because you have to give or take the entire amount. So that's where we went wrong, and I hope that you'll keep this in your mind. So our payables will be 198,000 and our receivables will be sales 286,000. If you want, you can make it into two separate entries, sales and then sales tax, but you can just write it both of them together. Okay, I hope you understood what we have done in this question, and I hope you don't have any doubt. That's it with our test your understanding 5. Now we have our test your understanding 6. Okay, after that we are just going to be left with the books. Okay, let's quickly finish it. So, Valerie's business is registered for sales tax purposes. During the quarter ending 31st March 2006, she made the following sales, all of which were subjected to sales tax at 17.5%, and she made the following purchases. Okay, what was the balance in the sales tax account as the 31st March 2006? Now, so how are you going to go about this? Tell me. So, first, you are going to make a you are going to calculate the tax, calculate the tax, calculate the tax, calculate the tax. Okay, you know the formula, and then you will add it. You are going to add it. Okay, so this will be nothing but this will be the sales. After that, you're going to calculate this and you're going to add this. Now you're going to subtract this, and whatever balance you have, that will be your answer. And you know what debit balance is and you know what credit balance is. But let's still just solve this question for you because some people might find it difficult. Fine, so for purchases and for sales. Okay, let's just do the output tax first. Output tax. Let us first do the output tax. What is output tax? Output tax is on the sales tax. So rate is 17.5%. So 17.5%. Okay. 10,000 excluding sales tax. Let's first do that. 10,000 excluding sales tax. Now you know the formula of calculating the tax and everything. So you know what to do when it is exclusive. It's going to be 10,000 multiplied by rate upon 100. Right. So what will it be? 1750. 1750. Simple. Circling it. Next we have 7402 including sales tax. 7402 including. So including, you will be doing the addition thing. So which will be 7402 multiplied by 17.5 upon 117.5. 17.5 upon 117.5. This will be nothing but 1102. Okay. Now let's move on to the third one, which is nothing but 6 excluding. So here it is again excluding, and what do you do in excluding? It will be a rate upon 100. So it will be 6745 into rate upon 100, which will be 6745 into rate upon 100, which will be nothing but 1180. Let's write that too. Okay, next we have 11632 including sales tax, including, so rate upon 100 plus rate. So that will be nothing but 11632 into 17.5 upon 117.5, which will be nothing but 1732. Okay, this is what we have the sales tax. So let's see the total of output tax. Total output tax. So what is the total output tax? You are going to add all of them. You are going to add this, and this. So when you add all of them, what do you get? Add it and let me know what the answer is. The answer is going to be 1750 plus 1102 plus 1180 plus 1732. It's 5764. I hope you're trying to do it by yourself, because there's no point of just watching this video without solving it. It will be a time waste. So this is our output tax. Now the same way we need to calculate our input tax. Okay, now let's discuss that quickly. So this is the input tax. So this is the rate. You know how to calculate. When it is excluding, you will be doing rate upon 100. When it is including, you will be doing rate upon 100 plus rate, including rate upon 100 plus rate, including rate upon 100 plus 12. And then you get an amount. What is the amount? So if you do the same thing for everything, you will be getting 7639. 7639. You will be getting 7639. So 7639. So now what will you do? Which is more, output tax or input tax? Input tax is more. Our input tax is more than the output tax. So what does that mean? If our input tax is more than the output tax, that means we have paid excess, which means we will get the amount back. So what is the balance? Balance is 7639 minus 5764. So just a second. So you're going to minus 5764 minus 7639. So that is going to be 1875. 1875. Now tell me something. Which balance is this? Is it a debit balance or a credit balance? Tell me. So this is a which balance? You're not able to understand it? Okay. Now let me make this clear for you guys again. So when our input tax is more than the output tax, which means we will be receiving the amount from the government, we will be getting the refund. So you know the journal entry of getting a refund. What is it? You're going to debit your cash account because you're getting excess, and you're going to credit your sales tax account. You're going to credit your sales tax account, right? Since you're going to credit your sales tax account, your sales tax account will get credited. So what is your balance? Balance is debit side. Credit, you're going to get a credit on your sales tax, which means our balance is debit. We've done this in the previous videos, right? Any doubt in this? Easy? No doubt? So the answer is B, which is 1875 debit. And since we are going to get a refund on it, then our credit sales tax will get credited and our balance is debit. Okay, that's it. We are done with the test to understanding 6 again, and we will be doing these are the day books. So this is nothing but this is how a sales book looks, and this is how a purchases day books looks. So what double entries arise from the following entries made in the day books? Receivables, credit, sales, to sales, but okay, this is just a normal journal entry which we have discussed. Now this is the test to understanding 2. What accounting entries are required to record the transactions on the assumption that Quincy maintains one receivable account and all amounts due from credit sales customers? Okay, this is very, very simple. This is also something which we have discussed so many times. What is the answer here? A, B, C or D? Read the question again. Okay, so first you will be finding the sales tax over here. You will be finding the sales tax over here. You're going to be finding both the sales tax. Okay, so including, you know the formula. In including, what we need to do, you know the formula of excluding and you know the rate. So you need to find both the sales tax and add, and you have to get the total sales tax. Clear? So the total sales tax. Now let us see what the purchases is. You know what you write in the book of purchases? So you always write the net value in the purchase book and the net value in the sales book. So what accounting entries are required to record the transactions on assumption that Quincy maintained one receivables account in all amounts due from credit sales customers? So we are going to debit the receivables account. We are going to credit the sales tax account, and we are going to credit the sales. Okay. So if it was a cash transaction, it would have become cash account debit. So we are debiting the receivables account and we are crediting the sales and we are getting sales. So sales amount is due. Here we will be having the net value, which is 1650. Here we will be giving the sales tax, which is 288.75. You know how to find it out, and here we will be having the total amount. So I hope it's clear. This journal entry is clear, no doubt about it. Okay, so that's it. We are done with this chapter. So this is a very easy chapter, and I know it has been a bit lengthy, but that is only because I've solved all the questions for you guys. So now you are done with the chapter 5. I hope you revise it properly, and I hope that you guys watch this video again if you have any doubts, and you'll be good to go. For the other chapters, check out the playlist in the description box below. Thank you.